Hello. What is up with my hair? Something's up with my hair. Anyway, hey, welcome back, folks. We got started slightly late, so for that, I apologize. Let's see how we're doing here. Let's check this out. It looks okay. All right, so welcome. My name's Dave, and do you hear me? I don't hear myself really in this thing very well. I think it's working though. If you're watching me here, then you're probably interested in making some money in the stock market, and maybe you don't know about this Vix stuff a lot. So that's why I wanted to just kind of back things up for a second, and I just wanted to talk about a way that you can make money from the Vix without having to like time stuff really well and whatnot. Thanks, Edward. Yeah, something's wrong with my setup here. I was messing around with it yesterday, so I can't hear myself, but you can hear me. So I'll just get rid of this earphone. All right, so I was thinking I would just talk with you for a second about the most kind of obvious and simple trade about the VIX, which would be to just be patient, wait for the right moment, and then put on a short position. So let's go to the chart. All right, so if we pull up the VIX, and people love to chart things, and people love to chart these products, although I'm not a huge fan of charting the VIX ETPs. People love to do it. They love to talk about, oh, well, you know, VXX is it's a triple bottom or something like that. But we can actually kind of chart the actual VIX a little bit. And this is a chart of the actual VIX. And what the VIX is it's basically a number that is based on sampling different options in the SPX, which the SPX is basically the thing that is traded most in the stock market in the world. About 80% of the money that gets traded in all the world stock markets goes through the SPX in some way or another. It's an index of the sort of the best American companies. And the VIX is a sampling of options in the SPX. So essentially, when people are nervous, they buy put options in the SPX, and the VIX goes up. So you can think of it as a higher VIX means people are nervous. Lower VIX means people are calm. The other way of thinking about that is a higher VIX is when things are moving around a lot. A lower VIX is when VIX is based also on SPX calls, Edward. Of course. But I thought I said options, but yeah, it's based on both. However, when people are buying options, and usually they're buying stuff when they're nervous, and you know, traditionally you think of it as them buying puts in the SPX, the VIX goes up, and thus they tend to refer to it as the fear gauge. If we look at this chart here, you can see the VIX, and it goes between like you can see the bottom here in the last year is like 11. And then it's gotten up as high as like 30. And generally, the VIX stays in this range, right? 10 to 20, 10 to 25. And so an idea for somebody to come in and trade this, if you, it's almost a surefire way of making money. But what it requires is something that many of us don't possess, which is patience. You have to just set up a brokerage account, have money in it in cash, and you just got to wait. And what are we waiting for? Well, we're waiting for the VIX to move higher. And right now, we're kind of in a mid-range. You could call it a mid-range. I mean, it looks higher now than it was a couple weeks ago, down at 12, at 15, but you could definitely say this is a mid-range. If we back this out to a 3-year chart, you can see it goes up and down, up and down, up and down. So inevitably, if you wait long enough, you're going to get one of these pops up. And so what you do is you're prepared on the sidelines for one of these moves up. And you're also prepared emotionally. But what do I mean by that? Well, this thing pops. The environment in which this thing pops up is one where people are going to be telling you, like, oh, it's the end of the world, this is the recession, the markets, pretty much everybody in chat rooms is going to be telling you that this is not a good time to put this trade on. And that is that's sort of the hard part of putting a trade on in the VIX during a spike, is that you have to have the confidence in yourself to execute a trade. It's essentially that thing where like selling when everyone's buying type situation. If you go in a VIX chat room when we're spiking, you're going to see all these people congratulating themselves that they are long the VIX in some way. And the trade we're looking to put on is shorting the VIX. But so you've got to stand up during that environment when we're spiking, and you've got to put a short trade on. And there's numbers of ways of doing that. You could buy puts outright, but I wouldn't suggest that. I'd suggest buying put spreads, basically. So buying one put, selling another. An example would be, let's take a look at UVXY. UVXY right now is trading 1374. So if we were to get a big spike, this might go to something like 25 maybe. And I would look to trade some options that are far out in time, maybe next September, maybe next June. The bigger the spike, kind of the closer you can move in time to some extent, because generally when you get a big spike, it's not going to stay up there longer than a day. But it can stay up there for weeks or even months. Let's look at the big spike we had last year. That we had a spike that lasted almost a year. Let's go back and look at that really quickly. So I want you to be aware of what the downside and the risk is in this sort of situation. So if we look at this and we go to okay, so you can see this October of 2018, if I get out of the way, there was a spike here where essentially UVXY went from like 30 to 90, right? And if where we are now, anywhere during this time period, if you had shorted it, you'd be making money by now. However, you would have made money quickly if you had shorted it at the top of the spike, obviously. But if you'd shorted it at the top of this initial spike, then you would have had to take some heat on the way up. And that's the other thing that involved with this trade is you have to commit to the fact that, yes, I'm shorting the VIX in a spike. It might go higher, but it's definitely going to go lower over time, and I just have to wait it out. And that's why I would pick options that are far out in time, up to like a year out in time, maybe like 9 months, something like that. Yeah, so here's the chart, Ronley. I can try to move it over, but essentially this is just a chart of the VIX. It kind of goes off my screen. I can get rid of this time and sales thing. Maybe that'll make it a little bit better. Anywhere that you shorted in this whole chart, you have made money by today. However, it would be nicer if we could, it would be a higher probability and almost a sure thing if we can short the VIX during a spike. And what does that involve? That involves us opening a brokerage account, having money in the brokerage account, because when you put money in a brokerage account, it takes like 2, 3, 4 days for it to clear, and spikes happen quick. So what you want to do is you want to set up an account, have a certain amount of money there, and be ready to go. And then you're just, live your life the way you normally would, but have that ready to go. And you might trade other stocks. You might be doing other stuff, but you've got this money set aside for when there's a spike. And then when the spike comes in, you pounce on it. And I would already have strategies in mind. I was looking at some of those strategies right now. So, for example, if we look out here in UVXY, we could look out to like June. If we were to spike to 25, then you might want to consider something like the June 22.18 maybe put spread. Buy the 22 put, sell the 18 put. That's a $4 put spread. And if we were up at 25, this would be worth significantly less. It's showing it here worth, 47 cents. There's only 47 cents left in this thing. But if this were way up at 25, that would be a different story. I would have a couple options in mind as far as maybe UVXY, maybe VXX, ways that you could take advantage of a spike. And the reason I'm showing you a put spread is because, yes, you could sell calls up there, but when you get a spike situation, it can extend higher against you, and you should be prepared. You should be prepared for this to go against you for a little bit at least. Well, I would pick strikes. I would pick strikes where there is something that is reasonable in your mind, reasonably attainable. So, for example, the all-time low in UVXY here is 1244. So, if we were to spike to 25 now, it's reasonable to think that we could get back to the low in 9 months. It's not reasonable to me to think that we're going to go to like $5. And the beauty of a spike is it allows you to move those strikes upward. So, for example, now if you're going to short UVXY, you might pick something like the something more close to at the money. You might pick like the May 1410 put spread, for example, thinking like, oh, well, in the next couple of months, this can roll down. I'm sorry, March. No, that's not what I want. You might pick, let's go out to June. You might pick like the June 1410 put spread, something like that, where you reasonably think that this can get to 10 in the next 171 days quite easily. But if we get a big spike, you can roll those strikes up. Instead of something like the 1410 put spread, you could roll it up to like the 2016 put spread. And that's the beauty of a spike, is it allows you to you've got this much better chances of it working out for you. TS, I would experiment with which strikes you want to pick, and it's going to come down to a risk reward thing. Now, selling call spreads and buying put spreads are very similar things. I would call them the same thing in a way. And when you're selling, so for example, you could sell an out-of-the-money call spread. Let's say UVXY is 13, let's just call it 14 right now. If you sell an out-of-the-money call spread, that being like with UVXY 14, if you sell the 1620 call spread, the odds of that working out for you are very, very high, but you're going to make less money when you're right than if you pick a out-of-the-money put spread where the odds are lower, but you make more money. So it really comes down to how much risk you personally feel comfortable with taking. The more risk you take, the higher the rewards can be. However, it can also go against you. So the strikes are going to be something that it's crucially important, but it's something that you need to think long and hard about. And this trade, and the trade being this, you fund an account, you wait till there's a spike, and then you go in and you buy put spreads in UVXY or VXX that have a reasonable chance or a good chance of being successful. And what do I mean by successful? Well, if we buy the 2014 put spread, it's successful if the underlying at expiration is below 14. So if we buy the 2014 put spread, we want UVXY to be below 14 at expiration. If we sell the 1620 call spread, we want UVXY to be below 16 at expiration. And if we get a spike, it changes the odds in our favor hugely, because we know that sooner or later, this is going to take out the all-time lows again. So even if it spikes to 90, we know that it's coming down, and it's probably going to come down pretty quickly. Well, options on the VIX TS don't have as much of an edge, in my opinion. Yes, you can use those too, but if we look at the VIX, options on the VIX are actually options on VIX futures. And if we look at the VIX, it's oscillating up and down. If we look at VXX or UVXY, it's slowly moving down. And the nature of UVXY or VXX to always be slowly moving lower is what creates the opportunity here. With the VIX, yes, the futures are also moving lower. And options on the VIX are not really options on the VIX. There's no way to trade the VIX directly. They're actually options on specific futures. And that's a thing too, and a lot of people trade those too. But I just don't feel there's the amount of opportunity or edge in options on the VIX as there are in the VIX ETPs. But like I said, VIX futures decay as well. It's just the nature of the fact that we have that term structure in contango gives us that extra bang to the downside, which is the thing that's can turn the odds in your favor here. So we've got a lot of stuff going for us. We've got contango decaying the stuff, and if we wait for that, if we're opportunistic and wait for that movement of the spike, then that's going to give us that extra amount of odds in our favor to make this stuff work out. And that's what we really want to do here. The thing I really dislike about casinos and about scratch tickets and all these things and gambling in general is that you're playing a game where you're destined to lose. The odds are against you. In trading, we're trying to put the odds in our favor, and this is one way of doing it. The odds are definitely in your favor if you short UVXY or VXX during a spike. However, it's going to take that amount of patience, which is difficult to have. You know, I know you want to make money today. We all had Christmas or holiday expenses. We want to pay them off today. But trading is not on a time limit. It's not that kind of thing. VIX, yes, VIX ETP. Thanks, Edward. Yeah, so there's that. All right, well, let's talk about the market just in general today real quick. And we have another down day in the markets. VIX up again. If we look at the term structure, stuff isn't going well. The news out from the embassy in Baghdad was that there was protesters attacking the embassy because the U.S. bombed Hezbollah. But just in general, the market is lower. And I suspect that part of this has to do with end-of-the-year tax selling. At the end of the year, people realize you've come after the holidays and you realize if you've made a lot of money in the stock market that if you sell some of your losing stocks, it's going to reduce the taxes you have to pay, and everybody wants to pay less taxes. So stocks that people are losing in, they're going to go ahead and sell today before the end of the year. And I would suspect that contributes to the down move of the last couple of days as people rebalancing, adjusting for taxes and whatnot. Now, that all ends tomorrow. Tomorrow's the new year, and we could have a slightly different market starting tomorrow. But I suspect that is why we're seeing some of this downward pressure today. I did notice that NEO has really come back. Let's take a look at that really quickly. NEO is an automaker from China who makes hybrid cars and SUVs. They do have access to the U.S. market, and this one has really moved higher after earnings came out in the last day or two. And I'm not going to sit here and talk about the fundamentals of it because I haven't studied them very well. However, it does appear like it's coming back to life. And congrats. I talked to a bunch of people that made some decent money in this NEO. So congrats to you. It really has made a very big move from 240 all the way up to 421, which is a really huge move. I know there's a lot of you out there who play these. This is almost sort of like a penny stock. and this one worked out. A lot of other ones don't, I know. My ACB has had its woes, and the whole MJ industry really has had its woes over the last couple months. I mean, look at this MJ chart for the ETF. And here's the YOLO one. Not good. And fortunately, I've laid off these for a while. I think they're going to have a turnaround at some point. But in the meantime, things have not been good for this industry at all. That new one, MJO, just came out that my buddies are running. Not a whole lot of volume in here. Let's see what it says for volume. Yeah, it traded 1,900 shares today. Really, the MJ industry has just been kind of brought to its knees lately, and not a whole lot going on there, and it has not been good. But yeah, if you are short volatility today, you're feeling the VIX expanding. Once another day we have the VIX up, you can see on the chart here that there's not a whole lot of room between the spot price of the VIX, which is 1532, and the front month future, which is 1552. So only 20 cents between the VIX and the front month future. That has tightened significantly, and what it really is happening here is just spot has moved up to meet the futures here. Now, you can see things are still in contango, which is good long term. That means this stuff is going to continue to decay long term, but in the short term, the VIX has moved higher. According to VIX Central, is it possible we'll only see backwardation in October 2020? Yeah, I wouldn't really be looking at these far out futures, and the reason for that is that nothing is trading in those, and so I wouldn't concern myself with actually what's happening there. I know there's reasons for it, but it's really not going to affect us at all for a long time, and by then it probably won't be like that. If you go to barchart.com, you can check out the volume figures in futures, and if we look out to the back months, you can see there's only like less than 100 contracts traded in everything after June of next year. So I suspect it's just that same thing as we had last year, where they discount December a little bit, and the time right before Christmas. And so I think as soon as that December future comes out for next year, you'll see that one lower too. But we're not trading anything that has to do with those back month futures. I know it's interesting to talk about the chart, but we don't. These are not going to affect us in any way. And if you are considering trading some of that back month stuff, I would caution you against it, just because there's not a lot of liquidity out there. It is interesting, though, that yes, you see that there's a sort of a dimple there. Yeah, that site is called barchart.com, and here, let me post a link in the chat here. That's a link that'll get you like directly to the VIX futures. Now, these are delayed, of course, but it does give you some information. The other thing I really like, while we're on the barchart.com thing, is if you go to options up here, some of these scanners are very helpful and interesting, especially when we come to earnings season. I like to look at this. If I could click on options and then highest implied volatility. Well, unusual options activity is good. Highest implied volatility is always interesting. And I love to scan this stuff. It's free for one thing. But what I'll do is I'll scan for highest volatility. And I'm looking at stocks that have higher prices. This stock's trading 69 cents. That doesn't interest me. It's hard to trade stuff with lower prices. But we've got RAD here. That would be, I believe, Rite Aid Pharmacies. Showing a little bit higher volatility. SIG, LK. This stuff is great to scan for potential options plays and for stuff that's going on. The other thing under options you can look at is percent change in volatility. That's going to show you stuff that's heating up. ET. And it can just give you ideas. I'll just look at some of this stuff and pull it up a lot. The other one is that one, unusual activity. This will give you like big block trades in different stocks, which is interesting. Additionally, while we're on bar chart, if you do just pull up barchart.com, like the basic website, it has these free reports by people. Let's see. See if I can find this. Market Pulse. There's contributors with, if you go to this news section, there's contributors with individual reports that are very interesting. I would check that stuff out. There's all kinds of free trading reports in here. Barchart.com. Really cool site. So, keep all this stuff in perspective. Yes, we have a down day, but when we look at the E-minis, that is what it looks like, and it doesn't look like we are crashing. It looks like we're at the highs right now. So, yeah, volatility has certainly expanded, and we're definitely off the lows. When we look at the VIX, we see we're clearly in the middle here, but there's not a whole lot going on. When we look at how much the indices really are moving around, they're not moving around all that much. If I go to studies, add study, and we pick historical volatility, we can see that probably this VIX is not justified. Now, the VIX could be based on something that's going to happen in the future, but in the present, we're not moving around enough to justify this 15 VIX. So something's got to give. Either we start moving around more, or the VIX is going to come back down soon. Thank you. Edward, thank you for your kind words. I actually am working with Bar Chart on something, or I've reached out to them a couple times about something. I think check if any of you do get Bar Chart Premier, let me know. But I have ideas. Basically, I'm working on a VIX app for your phone. So to give you a bunch of tools. It would be for free, of course, but to give you a bunch of tools to work on the VIX. But I can't talk about it too much because I don't want too many people to steal my ideas. So when do I think... I will answer your question, Ron, but as everyone knows, I don't know when we'll have backwardation. I know that it will happen again sometime. One chart that you can look at that can provide some insight for this, though, is if you do go to back to the VIX Central site, and we pull up contango, and you've seen me go to this one here before too. We unclick the F4 to F7. If you want to see what happens in the future, you might look to the past. That's what charting's all about. But if we pull up the last 2 years here, or how about the last 3 years, what I'm doing is I'm going to 2017, I'm holding the left button on my mouse down, and I'm dragging it across here. So it's just going to pull up just this one part of the chart. All right, so all the places that the blue line is under the red line are times that we have been in backwardation. So last time was in Jan of last year. At the end of last year, we had a down move in the market, and you see it, or no, that's not true. We actually were back in July there. You can see we were in July for a little bit. And then here, May, we were in backwardation too. So actually we can do this again, get even closer here. And you can see the last time we were in backwardation was August 16th. And then we were for a second here in May. You can see it usually just lasts for a little while, although the end of 2018, we were in backwardation for like a couple months. But you can see recently we haven't been at all, and we've actually been hanging out above 10% for a while now. Now, certainly we will get back there again at some point, and you can see in the last year we've hit backwardation a couple times. I don't expect that to change. You know, the market, you see similar stuff over and over again. As soon as you start to say, oh, it's a different world and we're never going to hit backwardation again or something, that's when you're getting into trouble. But right now we are, and usually when we hit backwardation, it doesn't last very long. This period in at the end of last year is pretty rare. Another thing I can suggest you check out is if you go to cboe.com, there are some great studies on the VIX and articles on the VIX here as well. And I'm trying to find a specific chart. I might not be able to find it while we're live here, but there's, here we go, history of contango and backwardation. Here we go, a quick look at backwardation streaks. So these charts that, let me just put this link in the chat too for you so that you don't have to try to read and strain your eyes here. This gives different times we were in backwardation for how many days. So this 2008, we were 68 days in backwardation, but most of these are like 10 days or less. In fact, there's, you know, besides the top 5 times or 6 times, everything is just right around 10 days or less moving forward. So most times these things don't last very long. This is written by Russell Rhodes. Everybody say hi to Russell Rhodes. Best of luck to you. I'm not even sure. He left the CBOE a year or 2 ago and is off doing something different, but he does show up back for volatility views from time to time. So everybody say hi to Russell Rhodes. He's a cool guy. Anyway, yeah, check out this backwardation streak stuff, Ron. It'll give you an idea of kind of like how rare this other article, History of VIX Contango and Backwardation. Now, this is from 2015. However, it does talk a little bit about how rare it is to be in backwardation. Who are the top 5 VIX pundits? Don't get me in trouble, Edward. That's a good question. Some people would put me in that list, others wouldn't. But anyways, this gives you some food for checking stuff out. Let me put a link just to VIX stuff on here if I can get it. Here we go. CBOE blogs VIX. Check that one out too. All right, so I'm going to do a brief position update, and then I'll let you get on with your day. As we see, currently E-minis now down 375, the VIX up 33 cents. And like I said, keep this in your mind, folks. Something's got to give here. Either we are going to make a bigger move in the markets, or the VIX is going to go back down, because you can see in the historical volatility right now, this is just not moving around. And think back to what we said about the VIX before. The VIX is based on people buying options in the SPX. The E-minis here is a proxy for the SPX, but you could just as well put the SPX chart up here. And thank you, Edward, for correcting me to say calls and puts. So somebody buys these calls and puts. That's what makes the VIX go up. So somebody owns a bunch of calls and puts now. If the SPX doesn't move around, they're going to lose money on those. And A, they're going to sell them back out. B, they're not going to want to buy them again. And it's generally going to make the VIX go lower if something doesn't happen. So something's got to give here. Either something's going to happen, or the VIX is going to move lower. And we'll find out soon, I guess. Now, it could continue to trend higher with nothing happening, but in the end, somebody's going to get burned owning those options if nothing happens. Oh, okay, Edward. No, I you know what? It is based on both calls and puts, and I do like to be corrected if I'm wrong, and I am wrong a lot of times. So yeah, it's based on both calls and puts, and the actual formula for the VIX is not disclosed. I don't believe it's actually disclosed. It's just told as I believe it's proprietary, but it's said as a strip of options in the SPX, including both calls and puts. Implied volatility changes. So yeah, so you're talking about implied volatility in which product? Implied volatility usually refers to options pricing. So where are options prices? And options prices in the actual on the options on the VIX, which you were talking about before, are reflected in the VVIX. So we can see VVIX down 88 cents today, thus meaning that prices have gone down in the VIX today so far. As for prices in UVXY and whatnot, I know that I've been following VXX closely, and option volatility has come up a little bit lately. We can see that the months that I've been following, you can see this list on the right side of the screen here. Let me make sure that my screen's centered so you can see it. You can't see it. Let me move it over. So these numbers here represent the implied volatility in different months in VXX, and you can see these things have moved a little higher. These back months were like 70, now they're like 75, 76. But generally, what happens is when volatility moves up, which the VIX has moved up, implied volatility in the VIX products moves up. So you get a pop in volatility, they're going to move the prices in these things up. And that makes sense because when volatility starts to move higher, people get interested in these products and come to buy options, whether they be calls or puts. So the no, I just lost what I was talking about. Let's see. I wanted to talk about my specific positions for a second. So my specific positions have not done well in this move. I own these January of 21, the 7 calls, and I bought them for 50 cents. Now they're 41 cent bid at 44. So not doing so well on those at the moment, but there's plenty of time left. Ron Lee, the VVIX is a indicator, and what it represents is implied volatility on VIX options. So if we look at the VVIX, when people come and buy options in the VIX, remember the VIX options are options on VIX futures. When people come and buy a lot of these options, we can look at the time and sales today. The VVIX goes higher. Some people use it as an indicator. Some people feel like once it gets above 120 or something, it's scary. But the VVIX is a somewhat useless indicator in many people's minds. I tend to think it's kind of a useless indicator too. But it's a representation of the implied volatility of VIX options. It's actually, Dave, it's not actually an index. It represents it's basically just a number that represents the volatility level of options on the VIX. So you can think of it as when we look at, if we pull up the VIX options on the VIX here, when we look on the right side of the page like we did for implied volatility on the options, and you see these numbers here, it's kind of a composite of all these numbers. It's a weighted average of all these numbers, the implied volatility of options on VIX futures. So right now 99, you can see when you look at these numbers here, 107, 105, 109, 96, you can tell since VVIX is 99, you can tell that it's weighted toward the near months very much, but VVIX is going to just tell you the price level of options on VIX futures. So some people think it's useful, some people don't. I tend to think that it's pretty much useless. And look at the volume in the VIX today. Very light, very light. Nothing has happened. The biggest trade is a 500 lot, very light today. I guess that makes sense as we're coming into the new year. So there you have it. Yeah, and so I wanted to say just once again that position I have is I'm long 250 of these Jan 7 puts that expire in 381 days. So yeah, it's gone against me a little bit, but I've still got 381 days for them to work. Listen, you guys, thanks for coming in and watching, and thank you all of you for those of you who have contributed to the Patreon account. It's only $1 to get you in there, and much appreciated. We've got the good news for people who, I know some of you are watching this, did not make money trading last year. The good news is we start a brand new year tomorrow. So everything starts at 0 tomorrow. Now you might be someone who's made who did well last year. Well, news is once again, fresh slate tomorrow. It's a new year. For me, one of my New Year's resolutions is I'm going to trade less. I burned a lot of money on commissions last year. So one of my New Year's resolutions is I'm going to trade less. Think about what your New Year's resolutions are. And everybody be safe tonight. I know I'm sounding like daddy here. Everybody be safe tonight. And, you know, it's a new opportunity, fresh opportunity to start stuff anew. And I'm excited. I think we're going to have a good year trading. So best of luck to all of you. And I'll see you next year.